Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 14th of November 2019, so welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, also just before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD Research tab, research page, which we can update on a daily basis. So yep, feel free guys to visit us here, and I believe you can find a lot of useful stuff. But for now, let's jump into the charts. Now, the first one I want to touch on here is the Nasdaq100. Now, I looked at this one recently, and basically I was telling you guys to keep a close eye on this upside support line taken from the low of the 3rd of October. Now, the line was a bit of a tentative one, but basically we still kept an eye on it. And looking at this picture here and looking at how it traded yesterday, initially it did drop before the market opened yesterday. It did drop lower, but didn't kind of travel below this 8,228 zone I talked about previously. So in a way, from here, kind of, or should I say, closer to here, the index kind of drifted back up and kind of stayed in near this upside line. But the only thing is that it's kind of the line has already been violated, and in a way, the index started ignoring it. So what we could do here is just get rid of this line. We no longer need it, because for us now the main focus will be on some of these key areas of support and resistance. Now, we will keep an eye on this one right here near the 8,228 zone that I just mentioned. And if we see a drop below this, then in a way this could lead towards further declines. We could see a test of the 21 EMA here on the 4-hour chart. But if that fails to withhold, then yep, this could be opening the path towards 8,157, marked by the low of the 6th of November. Or even we could go a little bit further down here towards the 8,120 territory, which is marked by the high of the 28th of October. Now, looking at the cash index right now, we can see that the index is below its yesterday's close. It's roughly around the 8,230, 36, 30, 38 zone, something like that. Like I said, it's getting closer to this level right here, but again, as I said, for us to get a little bit more comfortable with lower levels, ideally we will start looking at the downside if we see a drop below the 8,228, and then just for that extra confirmation, a push below the 21 EMA here on the 4-hour chart could do the trick for more sellers. So that's why, guys, for now, keep your eyes on this one. Quick update on WTI Oil. I've looked at this one recently, and basically I was telling you guys to keep close eye on this rising channel pattern. So the commodity continues to drift nicely inside of it. It initially, in the beginning of the week, it moved a little bit lower, but as you can see, it kind of found support somewhere around here near the 56 mark, just maybe slightly above it, and then kind of pushed back to the upside. It is approaching its key barrier here. This is the barrier for those who like to be on a little bit more on the cautious side. So if we get a push above the 57.80 zone, roughly around here, then yep, this could in a way open the path towards higher levels, because this would confirm a forthcoming higher high, and we could then aim for the upper bound of this rising channel. So roughly around here, the level to monitor around that area. Let me just quickly put this one on the chart. Could be around this level right here near the 58.70 zone, or if this continues to push further north, then we will aim for this little high that we saw here back on the the 20th of September, and that's roughly around the 59.2025 zone. So around here, guys, basically. So for now, of course, the main focus here is going to be on the 57.80 zone. If we get a push above this, this would confirm a forthcoming higher high, and we could then aim for these for this higher level. In case this decides to reverse back down, with the downside, we'll be very careful because in a way, any kind of pullback here could be seen as a temporary correction before another leg of buying. So in a way, how we could play this one out is if we start seeing, for example, the price sliding below the this low here, this current low of this week, and that's roughly around the 56.17, 15 zone, somewhere around there, then yes, this could in a way lead towards some declines here, where we could aim for the lower bound of the rising channel. But again, at this point here, I mean, I do understand we're missing out a bit of on a move here. But to be honest, for now, looking at this pattern, this formation, any kind of, like I said, any pullback down could be seen as a temporary correction before another leg of buying. But like as I said, for those who are more on the cautious side, you could just sit this one out and wait until we get a push above the 57.80 zone. So yep, keep your eyes on this one. Bitcoin, a quick mentioning of Bitcoin. I've looked at this one previously, and basically a few days ago I was talking about this falling wedge. It continues to play out nicely. So as we know, according to all the technical analysis rules, falling wedges tend to break to the upside. But again, we cannot really assume that, or we can assume that, but we cannot really get confident about that yet because we need some confirmation breaks first. So in a way, for us, the first confirmation will be a break of this upper side of the falling wedge, and then just for that final confirmation, a push above this little high here near the 9,250 could do the trick for more buyers, and we could see this one traveling higher. We will initially target the 9,645, but to be honest, our much more awaited target could be the highest point of October here near the 10,480. But again, I'll repeat myself, we need that break here first, because at this point in time, and we've seen this happening a few times, where it is kind of forming, let's say, a falling wedge or something like that, and then it decides to break here to the downside, drops lower, and kind of ignores the whole pattern and decides to move either way. So with the downside, that's why we're leaving a little bit of room here, and with the downside, we'll consider lower areas if we see it drop below the 8,371 zone, and if we do see that, then yes, we will aim for lower areas. So let's keep an eye on this one. AUDNZD. So quite interesting developments happening here. Of course, as you know, we had a strong sell-off here yesterday and today as well, and AUDNZD kind of traveled lower, dropped below our target here, and this is what I was saying a few days ago, or should I say yesterday. I was talking about this one, and basically I was telling you guys that this is going to be our target near the 1.0660. We overshot that with quite a lot, let's put it that way. The pair today found support near the 1.0602, roughly around there, and kind of now it's drifting back to the upside in a way. Of course, this does have a chance to push further north, given that we do have a steep down move here, and in a way a bit of correction could be quite possible. So in a way, as if, let's say, this decides to travel higher but fails to push back above the 1.0660, then of course we could see something like this happening, where if the rate gets a hold up near this level or below this level, then we could see another round of selling, which could bring the pair lower again. And in a way, one of the important levels that we're going to be targeting here, and let me just quickly adjust this, and of course this is this one right here, marked by the low of the 23rd of August. Now, roughly around here. So, of course, I do understand that this is quite a bit of a move here. So, in a way, some closer levels should be monitored as well. In a way, what you could do here is keep an eye on this little inside swing low here. Let me just quickly adjust this. There we go. Inside swing low near the 1.0575 zone, and that's the inside swing low of the 22nd of August. So we'll keep an eye on this one. Could be quite interesting here, but for now, of course, we are aiming for a bit of correction here, maybe a bit more. But if the pair, let's say, struggles to overcome the 1.0660, then we could see another round of selling. If this decides to push back above the 1.0660, this territory here will be somewhat of a neutral one for us, because for us at the moment to get comfortable with higher areas, some higher areas, at least in the short run, push above the 1.07 would be required. So for now, it seems that the upside could be slightly off the table, unless it's a short-term correction. If it pushes above the 1.0660, then yes, we could potentially start considering higher areas, but we'll get a little bit more comfortable with the upside if we get a push back above the 1.07 zone. So for now, we are aiming for a bit more correction, but again, still the downside. Kind of the downside is our main scenario for now. GBPJPY. Quick update on this one. Not much happening since I last time talked about this one. Basically, I'm still telling you guys to keep a close eye on this little range here. We're still stuck in this little range, and to be honest, the more it kind of continues to move sideways here, probably the bigger the explosion could be here. And well, maybe it doesn't sound very logical, but the explosion could be to the downside here as well. So for now, guys, yes, it is closer to the lower side of the range. We're keeping a close eye on this one, because if it suddenly drops below this and continues to move lower, yes, we will aim for further declines. Initially, we'll target this 200 EMA here on the 4-hour chart, and that's roughly near the 130, or should I say even 138 mark. So that's what we're going to be targeting. After that, we'll see what he wants to do. If he wants to continue sliding, perfect. We may see this one drifting much lower, and potentially maybe going all the way back here towards this upside support line taken from the low of the 3rd of September. So that's why, guys, for now, keep your eyes on this one. Keep your eyes on this one, yep, and let's see how this is going to play out, because again, for now, it's stuck in this range, and we're waiting for the nice exit here. USDCAD. Now, USDCAD, I've looked at this one. Well, I haven't looked at this one for quite a while, to be honest. And basically, last time I was talking about this, we were kind of breaking this 1.3212 zone roughly around here, and then you can see that it acted as a fantastic area of support. And now the pair is struggling to overcome this 1.32, 1.3268, 69 zone, roughly around there, or in a way we could even round it up towards 70, basically, guys. So just kind of to have a nice, beautiful number here. So if it continues to struggle to overcome this 1.3270 zone, then, well, how you could do here is we could in a way get something like this, basically, where we could see maybe a correction, maybe a test of this upside line here taken from the low of the 29th of October, and if it let's say acts as a fantastic area of support again, then we could see a nice rebound here and a push back to the upside, where we'll aim for this 1.3270 level again, a nice good break of which would confirm a forthcoming higher high, and we could then target these higher levels. So that's of course in the scenario if this level here doesn't break, if the 1.3270 level doesn't break, and then we see a slide lower. If it decides to break right now straight away, we will first only target this 1.3294-95 zone, and then we'll take it from there. Or in a way, we could see even maybe a test of the 1.33 area as well. So that's why for now, this level here will be our target if we see a break of this 1.3270 zone straight away. But if the break doesn't happen straight away, and the pair first decides to retrace lower, then it rebounds from this upside line, then we will target much higher levels. Then this way, more bulls could start joining in here and potentially could drive this one much higher. In case this decides to break this upside line, we will consider the downside only if we see a drop below the 1.3212 zone right here, which previously acted as a fantastic area of support and resistance, as you can see here. So only then we will consider the downside. So let's keep an eye on this one, guys. And the last pair for this session, and that's euro dollar. So this is what I was talking about for the whole week, basically, and we've managed to hit our this target, this 1.0989 perfectly. So we had a perfect test, and you can see that the pair rebounded and is trying now to make its way higher. So the big question here is, of course, can it travel higher? Can it retrace? Can it regain some of its losses here made, let's say, from the beginning of November? Now we will consider that we'll consider that idea if we get a push above the 1.1016. This is where the pair would also climb back above its 21 EMA, and we could then aim initially for the 1.1043 and then maybe for the 1.1063, and roughly we'll target this 200 EMA on the 4-hour chart. As this is exactly what I was talking about this morning, basically, guys. So we're not gonna target this one too much to the upside. We'll just keep it short and simple, because overall still the trend is kind of more to the downside. And that's, I'm talking about the short-term trend, of course. So that's why, guys, for now, keep your eyes on this level right here, the 1.1016. If we get a push above this, then yep, we will aim for higher levels, slightly higher levels, the ones that I've just mentioned. But if it decides to drop through this barrier right here, the 1.0989, now this is where it could turn out to be ugly again for euro dollar, and we could start aiming for lower levels. But to be honest, I'm quite happy because this target was met. This is what I was talking about from the beginning of this week, basically, where we were still hanging around here. We were hanging around here, and I was saying that to keep an eye on this 1.0989 level, and to be honest, we would probably not see huge swings this week, well, due to the fact that actually the pair is already quite overstretched here to the downside on the shorter time frame, of course, and we could see only this level for now. We could be targeting only this level for now. So that's what happened perfectly. So now the big question here is, as I said, can it actually regain a bit of its losses here made from the beginning of November? If it can, we will start looking at higher levels only if we see a push above the 1.1016 level. If it drops below the 1.0989, this could turn out to be ugly again for euro dollar. So let's keep an eye on this one. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning, as always, at my Trader's Espresso, that's 7 o'clock GMT time. For now, if you're still trading, guys, be very careful, stay safe, have your stop losses in place, and yep, as I said, join me tomorrow at my Trader's Espresso, and we'll have a look at some of these charts again, see how they've performed. We'll have a look at some new ones, and yep, we'll take it from there. Thank you very much, guys, and bye-bye.